Welcome to this edition of Diligence Inside America's Boardrooms. I'm TK Kerstetter, and I'll be your host for today's show. Today, we're going to be talking about taking the pulse of key proxy issues that impact annual meetings. And joining me to discuss this is Matt DiGuiseppe, who's the Managing Director of PwC's Governance Insight Center. Welcome, Matt.
Hi, TK. Great to be back on the program.
So each year, PwC's Governance Insight Center publishes its Proxy Pulse, which takes a look at key issues and other issues that are going to impact both the annual meeting and subsequently the voting. Let's take a look at what the key issues are that all boards should be aware of for this year. So what are you seeing?
Yeah, it's funny. Proxy season talk starts in January and February, driven by some high-profile meetings. But really, it actually doesn't begin in earnest until about the last week in April, when you have the first big wave of meetings happening at one time. And heading into that, we've observed a few trends and things that we expect to see. The first is race to the top on climate voting, both impacting shareholder proposal support and director elections. And I think we're going to dig into that one a little bit more down the road. But the other things that we've been seeing is evolving expectations around human capital disclosure, especially around the data that investors are expecting companies to provide. A recent Bloomberg article noted that over 90 of the S&P 100 companies have either disclosed their EEO1 data or committed to doing it. That's a really stark change from 2020, when only a handful of those companies actually disclosed that information. But I think what's important for boards to be aware of is, if you look at the sort of pattern that was established around climate-related disclosures, the initial expectation was for companies to provide data and disclosures around sort of what they were doing, what they were measuring. And over time, the discussions evolved to focus more on sort of what were the companies actually doing with this data? How were they incorporating it into strategy? How is it driving their decision making? And I think you can expect that sort of similar trend to evolve around human capital related disclosures, where right now the focus from the investor community is very much around the data. But you're starting to see inklings of that sort of strategy, or what are you doing with the data question, jump in there, especially with the growth of shareholder proposals around things like racial equity audits. Finally, there's been a lot of activity at the SEC recently with proposed rules around cyber and climate-related risk disclosures. But Chair Gensler has also said that human capital is a topic that's on his agenda. And so you also will be wanting to watch that space to see if there are evolutions on there. Another trend that we've seen sort of leading into the proxy season is evolution of the shareholder activism landscape. There's going to be a significant shakeup this summer when there's a universal proxy finally available. And we actually discussed in our most recent PwC webcast, proxy season webcast, the concept that the universal proxy, we really don't know what that's going to lead to or what the impacts are going to be. But early indications and discussions make it seem reasonable that it'll probably result in activists winning more board seats in short slate elections where they're not seeking control, and management probably being able to better defend situations where activists are seeking control of the company. But in addition to sort of the traditional activism proxy contest discussions, we're also seeing growth of other types of activism, whether it's shareholder proposals that are receiving majority support, director elections, or more in-depth engagements, all of which institutional investors are availing themselves of more frequently based on what we're hearing. And then finally, there's also been a divergence in support of shareholder proposals between the institutional and the retail community. Retail shareholders don't get talked about very frequently, but they do make up around 30% of most shareholder rosters. And so, paying attention to that trend, especially when it comes to E&S proposals, environmental and social proposals, is important. And so, that's something where when you're looking at your shareholder roster, you can understand how some of that change will impact voting outcomes. So those are really sort of the four key areas that we've identified: the race to the top on climate, the increased focus on human capital, not just the data, but strategy, the shifting shareholder activism landscape, as well as the divergence in institutional and retail voting.
So to translate, disclosures, and more disclosures. Just what we need is longer proxies and challenges for boards to tell their story. But it sounds like corporate secretaries and general counsels and investor relations are going to have a lot of work to do to make sure all those disclosures both meet the requirements, but more importantly, truly help the investor.
For sure. I think that is an important story to be told.
So let's talk about the climate, because, there does seem to be sort of this race to the top. And I talked to a NomGov chair the other day that was pretty frustrated because they had taken the time to meet with their investors, their largest investors, to discuss how they could make their data, their climate data, as meaningful as possible. And they said to do that, rather than just putting something inane in the proxy, they said, we'd like to, do this correctly and have it be meaningful. Well, because there hasn't been anything published by the company, one of the proxy advisors has put out a recommendation to vote against the chair of the NomGov committee. Now, they hadn't met with that particular proxy advisor, but they had let them know what their plans were through other investors. And I guess my feeling is that the climate disclosures and the cyber disclosures, everything, there's still a lot of sort of chaos going on to get your arms around what is correct in all that. But it seems almost unfair that somebody is making the effort to do something logical and yet, subsequently pays the price for it. So what's the whole deal with this sort of race to the top?
Yeah, that's understandable. And I think there is a convergence of a number of different elements that can make it difficult to understand even what's being asked of the company and the board. First, I think the reality is most large institutional investors now have identified climate risk as a long-term risk to their portfolio. And they want to understand how companies are managing it, right? And to understand management, it's not just about having that data, but to your point, how the companies have thoughtfully understood what they're disclosing. So those investors are open to being convinced. But there's also this element of an increasing focus on boards of directors when it comes to climate. Right. We know from data from firms like Proxy Analytics that there are more shareholder proposals that are coming through on climate and really all topics this year. And we know that the proposals are maybe a little better targeting the topic to the specific company relative to their disclosure. But then there's also this sort of new, I'd say, global focus on climate-related risk and disclosures, where even if there isn't a shareholder proposal on the ballot, investors and proxy advisors are evaluating the company's disclosure, and absent any sort of specific action they can take, like voting for a shareholder proposal, they are looking to vote against the board. And this is a sort of evolution of a trend that we've seen around, executive compensation, voting against the say-on pay and the board at the same time, gender diversity, voting against board members for lack of gender diversity on the board, or broader human capital questions. And now you're seeing that sort of creep into climate. And so as a company, if you're still figuring out sort of what your disclosures look like, what your program looks like, how climate is going to impact your strategy in the near and long term. It really requires that proactive disclosure to the market around what you're doing and recognition that in some cases you may be behind investor or proxy advisor expectations, and that's not the end of the world. It just means that there is work to be done, and you need to understand sort of the results of the meeting in the context of where you are as an organization, right? I think if we're sort of looking at the past practices and the way you and I sort of came up in the governance space, right? Directors generally receive over 90% support. Maybe there's an issue here or there that leads to sort of lower levels of support. In the current environment, every director not receiving above 95% support isn't necessarily a bad thing. It just means that there are opportunities to improve disclosure and communication to the market. And you need to unpack the results with that knowledge, right? And understand what might be driving the results that you see coming in, because for every investor, it won't be the same. You mentioned in this case, the proxy advisor recommended against the Nom and Gov committee chair for climate-related concerns. Another investor said that they're voting against the audit committee chair for climate-related concerns. And so you really have to spend some time as a board with your management team, with your corporate secretary and general counsel, unpacking and understanding what the results are and what they mean and what the expectations are as a result.
Yeah, I don't want to minimize the importance of the climate and certainly the cyber and whatever, but I must admit, I do worry about getting what's the best use of the board's time with respect to, driving performance and getting to those discussions. And yes, cyber and climate should be discussed within the strategy of the company, generally. But my experience has always been with any disclosure, rarely does it end up being a discussion of the board because the corporate secretary or somebody is putting the legal spin on whatever is, ultimately included in the proxy. And it's not really reflective of the discussions that maybe have or should be having, the board should be having relative to the topic. So, I always question whether the disclosures are truly helping, in the long run, but that's for another show and another discussion.
Yeah, we could spend a long time talking about disclosures moving from the what to the how, right? That could be a whole nother show.
Yeah. So we have about a minute left, but I wanted to ask you if there's any tips or best practice that you could pass along to companies and boards with respect to, sort of getting shareholder support for their climate or cyber risk or any other proposals that end up to be in proxies.
Yeah, in short, it really starts with disclosure, and then it's about engagement. It's really difficult to engage on things that you haven't disclosed or you haven't thought about sort of how you're communicating them effectively. And finally, when you think about engagement, it really is about understanding what is the story that you're telling. Right? It's not just going out to communicate reiterate what's in the disclosure. It's how do you take that disclosure and weave it into a story that allows investors to understand the seriousness with which the board is approaching these issues. Because you're right, it's very difficult to capture, sort of the nature of what's being discussed. And so that's really where engagement can help.
Well, Matt, we're always appreciative. Your institutional investor experience in your career gives us a thoughtful angle that we don't always get, and I'm always appreciative when you give us time to come on the show because you can certainly know what the mind of the investor is thinking, at this point in time. So I wanted to thank you again for taking the time to join us.
Certainly. Yeah, I always appreciate it. And I'm really open to sharing.
So that will conclude this edition of Diligence Inside America's Boardrooms. We hope you enjoyed the show. We'll be back again next week when we take another look at a critical topic that'll help you be a better board member or committee member. So we'll see you then.